Okay, I want y'all to see this real quick. BlackRock. Let's talk about BlackRock for a second. So I'm reading this paper, and yes, I know I'm retarded. It's called the New Vote Buying, Empty Voting, and Hidden Morphable Ownership. It talks about all kinds of crazy schemes to be able to do this, basically. This is all of the major players' 13 Fs that just came out this month from Barclays, Susquehanna. I threw Warburg in there just for shits. IMC, Wolverine, BlackRock, Simplex Trading, Goldman, Citigroup, JP Morgan, and Citadel. Now, interestingly enough, there's no sole voting rights for BlackRock, but there is sole voting rights for everyone else. So even though they have derivatives or puts, um, voting rights basically, like you don't, when you have a put option, it's a derivative, so you don't technically own it. It's considered off balance. However, there's a loophole that allows them to still have voting rights and affect business decisions, as far as shareholder meetings are concerned. Now, if you remember, why did GameStop have us all vote on our shares as soon as possible? So we can lock that shit in. So we don't have to worry about this. There is so much different things that goes into this. It involves like buying puts before the meeting, only to reverse the transaction later. Buying a shit ton of shares the day of the meeting, and then selling them right before the actual meeting starts, and that's somehow a loophole that you still have voting rights, even though you don't have the physical shares in your possession. So that's besides the point. What I really wanted to show you here is about BlackRock and Safe Harbor. So Safe Harbor for voting and lending shares. Okay, so I'm going to explain what this is real quick. Now, a little background. This section right here is talking about strategies focused on supply and demand, forces in the market on which the new vote buying relies. So, and the new vote buying they're referring to as this is the topic of the paper. New vote buying is a manipulative tactic to gain control of proxy votes and basically have control over decision making at shareholder meetings for different companies. So basically, they're saying a more modest step to address this would be, or a more modest step would address the dilemma faced by an institutional investor, which can either lend shares and profit from doing so, or hold and vote the shares. Lending will often be privately optimal, like, for example, what we see with Vanguard. Back to the spreadsheet. Go over here. Vanguard, no voting rights right there. Look, none. This section is none. So we can see Vanguard's incentive. They were trying to make a little extra money. Not a problem. They're lending shares. Big freaking deal. Everyone does it. Share lending is like the whole freaking market. So then we look at BlackRock. BlackRock, they were lending a little bit, but they weren't lending a lot. They were not. This is proof right here that BlackRock was not lending very many shares. They had 7.1 million, and they only had 11.439 to lend out, and that was likely, basically, going down over time slowly. What is this? Dude, I was making a video and my Excel started talking to me. What is that? Oh, hold on. How? What? I don't understand. Oh my god. Who? Bro. Okay, anyways, I'm just going to continue with the video. Um, is it going to follow me for real? What the? Dude, this is nuts. This is nuts. I've never seen this. I mean, I don't know. Maybe this is like a normal thing. I've never seen it. He doesn't understand I'm making a video. But anyways, BlackRock. What we're talking about here. BlackRock was lending a little. I can't do this. Oh, jeez. I'm sorry, hold on. Wow. Okay. I did not know you could do that. Technology, everybody. Gosh, where were we? Oh, that scared the shit out of me. Oh my god, dude. Oh Jesus! And that was you're gonna see the genuine reaction. Like I paused the video, like you'll just see. Anyways, this already is getting too long now. Okay, so anyways, where were we? Okay, Vanguard. They were lending basic other shares. They did not hold to vote. Okay, BlackRock did. BlackRock held that many shares, likely more because they just sold I think 20%. This 13F reporting period. I think they had just as much as Ryan Cohen did at about 9 million. Now keep that in mind, okay? I'm sorry, that was weird. So I wanted to show you something that I found in BlackRock's 13F. I want you to read this. This is the most bullish thing I've ever seen in my entire life. If I can find it. I'm retarded. That shit scared me, man. Like, good lord. Okay. What am I doing? That really scared the shit out of me, man. You got me with that shit. Okay. What am I showing you again? Right. The BlackRock thing. Oh, PowerPoint. I want you to just listen to this shit. A distinct theme that emerged later in the period concerned the overall sentiment of retail investors. Specifically, so-called meme stocks experienced unprecedented levels of price volatility, most notably GameStop. The majority of the fund's underperformance was attributable to the underweight positions across those names, which experienced sharply rising share prices driven by retail traders. While the fund was underweight to GameStop due to weak expectations across company fundamentals, investor demand for the stock created a frenzy, which drove the name into a top 10 constituent within the benchmark index. While the fund ultimately increased exposure to GameStop to reduce the underweight relative to the benchmark, it remained underweight as the realized risk of the stock ran against the fund's risk managed approach. Overall, this position weighed on the fund's valuation-based metrics as the stock had been a deep value name entering 2021, resulting in losses across that signal composite. I'm going to read that one more time. Overall, this position weighed on the fund's valuation-based measures as the stock had been a deep value name entering 2021. Now you see why BlackRock has been holding, because they see the deep value, man. They have Aladdin, bro. Let's do it. Okay, sorry about the long video. That was scary as shit. Whew.